Hello, everyone. It's Stephen Whiteside here from the Uptrend.com with this weekend's edition of Protect Your Portfolio. Well, here we are. This is the second weekend of January, and it looks like the big cap stocks are starting to catch up with the rest of the market. In this presentation, we'll start off with talking about the big trends the world is watching. Then we'll look at the U.S. market, and we'll finish off taking a look at the Canadian market. Now, there are two actively traded markets that are much bigger than the stock market, the first one being the currency market, and the US dollar index just continues to move higher week after week after week. And of course, the US dollar index moving up means it's cheaper for Americans to vacation and to buy stuff overseas and to import stuff into the US. And there we are with the euro making a new low this week. We saw a new low for the Swiss franc, while the Canadian dollar held up, did not make a new low this week. So the US dollar index still chugging along. That is a major trend that the world is watching. The other major trend is US bond prices continuing to break down here. And we were looking to see if the lows from last April were going to hold, but we've broken through those. Now we're heading to lows we haven't seen since the fall of 2023. Of course, if bond prices are falling, that's putting upward pressure on bond yields, and that's putting pressure on the Fed. The Fed was looking to lower interest rates in 2024, but the market's telling them not to do that just yet. And we'll have to see when these bond yields come back up to the highs from 2023. Now, another market that the world is watching closely is the price of crude oil, and it was up 3.34% on the week, up 3 weeks in a row. We started to move up above the high from a few months ago. We haven't closed above that level, but that could certainly help end the pattern of a series of lower highs. And that would be certainly bullish for the energy sector, but not so much for the stock market and the global economy. Now, a more localized commodity is natural gas. It was up over 15% on the week. That's not a big deal for natural gas. Natural gas can often be very volatile. But here we are making a new high and looking to see if we can take out the highs from the spring of 2023. Now, getting back to the stock market, the VIX was up over 21% on the week, but the VIX has been elevated for the past couple of months, and being up 21% really didn't change things. On a long-term basis, we're looking for a close this coming Friday above 1967. Now, looking at a daily chart of the VIX, you can see what a normal-looking VIX looks like. The size of the bars, the movement that the VIX takes, and coming into December, you can see the VIX had a lot of very small range bars, and then we saw a huge pop in the middle of December, and it didn't really settle down. We did come down to a reasonable level very quickly, but since then, the VIX has been very elevated, and that tells us that options traders have been spooked about something. And we know that the majority of the market has been falling over the past month, while those big cap tech stocks have been essentially holding up the US market. And it's the big banks in Canada that have been holding up the Canadian market. Now, in 2024, we were watching some big round numbers, and the first one that comes to mind is the $600 level on the SPY. And that number is still acting as resistance. This week, the SPY traded up to $599.70 before reversing and actually closing below the lower channel line. So we're back on a weekly sell signal for the SPY. Looking at the NASDAQ 100, the big round number was $500, and we're still trading above that, but we need a close this coming Friday below $502.67. And that would give us a new weekly sell signal. And of course, it's those handful of big cap tech stocks that are still holding the NASDAQ 100 up. That $500 level acted as resistance last summer and then into the fall. And then finally, we started to break out above it and got up to our next target of 531.25. So far, that level is holding us in check. And now we're looking to see if the $500 level will hold as support. Now, while we were watching $500 on the NASDAQ 100 ETF, the NASDAQ Composite Index had driven up towards 20,000, and so far that big round number is holding the technology sector in check. Now, just a quick comment here about big round numbers. When we look at a big round number for an index, It's not permanent. Indexes are designed to go up over time. They do that by constantly churning their stocks. They get rid of their poor performing stocks and replace them. And that causes the indices to go up over time. There's no there's no timing. I have no idea when we're going to break through 20,000, but I'm pretty sure, I'm 99.9% sure at some point we will break through 20,000. Now, when it comes to individual stocks and big round numbers, a lot of times those big round numbers hold the stock in check forever. And oftentimes the stock will fade away. A good example is a stock that's in the Dow 30 right now, which is Cisco. Cisco peaked back in the dot-com bubble 25 years ago and has never reached that level again. So, big round numbers can hold a stock in check forever, while comparing that to an index. Indexes, again, are designed to go up over time. And at some point, the NASDAQ will break through the 20,000 level. I'm almost guaranteed that's going to happen at some point. I just don't know exactly when it's going to happen. Now, this is not the first time in history in which the stock market has been focused on a small subset of stocks. Right now, it's the Magnificent Seven. Back in the 70s, it was the Nifty 50. In the late 90s, it was the dot-com or internet stocks, which produced the dot-com bubble. It changes all the time, but usually there's somebody front running the rest of the stock market. When we talk about the rest of the market, there's a couple of ways to look at it. I like using the Russell 2000. There's not exactly 2,000 stocks in the Russell 2000, but it gets pretty close. There's over 1,900 stocks in the Russell 2000 index right now. We're looking at the ETF, and the ETF has been on a sell signal for a month now. If we look at the daily charts, we've been looking at the fact that we're trying to hold support here, and we've been stuck in a tight range for the last month with 225 at the top, 218.75 at the bottom. And as you can see, this week we started to break down below that bottom. And so here we are. We're still on a weekly and a daily sell signal for the Russell 2000. Another way to look at to take a broad look at the U.S. market is to use the equal weighted S&P 500. So that means every stock has one vote as opposed to the S&P 500, which is a weighted, which means that the bigger the more valuable the company that you are, the more weighting you have in that index. And you can see that the equal weighted S&P 500 has also been on a sell signal for the last month. On a daily chart here, you can see when we generated the sell signal in December. And now we've made it all the way down to the 200-day moving average. And we also filled a gap from September 12th. Can you imagine that? From September, October, November, we peaked in December, and now a month later, we're back to where we were on September 12th. Now, this is a great example of the stock market, which traditionally rises slow and steady like an escalator and then falls like a broken elevator. And that seems to be what's happening right now. Now, we've also been following the small cap stocks. They've been on a sell signal for the last month, while micro cap stocks have moved up over the past couple of weeks on the back of rising commodity prices. But this week, they came down with the rest of the market and are down over 6% and back on a weekly sell signal. Now, the Magnificent Seven ETF is still on a buy signal, still closing above the upper channel line. The weighting of those stocks is just enormous. Look at Apple. It's 5 times bigger than Walmart right now. And Walmart certainly has 10 times as many employees as Apple does, but that's what the value that the market is putting on Apple. So here's those Magnificent Seven stocks right at the top of the weighting of the S&P 500, and you get down to Berkshire Hathaway before you start moving away from those big cap technology stocks. Now, I've been following the financials closely. I may not trade them, I may not invest them individually, but they really can help tell you the health of the overall market. We have U.S. financials back on a weekly sell signal, joining U.S. banks and regional banks. So there doesn't seem to be any concern about the health of the remainder of the regional banks at the moment. But here we are on our fourth week of a sell signal, making a new low for this move. The broker dealers rolled over this week. They are back on a weekly sell signal, joining insurance stocks, which were down sharply for the insurance sector, down nearly 4%. And of course, there's individual insurance companies that have different exposure to California. And you'll have to deal with those on an individual basis to see what kind of damage California can do to those stocks. Now, moving on to the Canadian market, which is holding up fairly well at the moment. We're sitting right on the edge of a new weekly sell signal for the Vanguard Canada ETF and for the iShares for the TSX 60. So that could come this week if there's downward pressure on the market. Most of the strength in the Canadian market is coming from those bank stocks. Those are still holding up fairly well, and we're getting money coming back into the commodity sector. So that's helping to hold the Canadian market up. We had a reversal in small cap stocks this week. We're still on a weekly sell signal, no change there. And a reversal in micro cap stocks that once again ran up to the 625 level on the venture exchange and started to pull back. Now, there's the Canadian banking sector. It's still on a buy signal. Canadian financials are still on a buy signal. That, of course, could change this week. We saw money go back into the energy sector with crude oil moving up nicely. We were up nearly 4% on the week, back on a weekly buy signal, still putting in a lower high. That hasn't changed yet. Now, we also saw gold stocks up 2.69%, traded up to the upper channel line before pulling back. So we're looking for a close above $22.95 this coming Friday. Now, if there's a lot of downward pressure on the overall stock market, but commodities continue to move higher, it's important that you focus on your stock and not the commodity. We can see commodities continue to move higher, but if the market doesn't want stocks, they can sell off all of your commodity stocks with the rest of the stock market. So just be aware of that. We've had gold moving up this week, and you can see gold stocks did move up, but they certainly haven't changed their long-term trend at the present time. Then looking at the telecom sector, I get a lot of emails about the telecom stocks, and they're still putting in lower highs and lower lows. That hasn't changed. We're stuck here at the 137.50 level. If we start to break down, then 125 is our next target. Right now, it looks like the pros have no interest in taking control of these stocks. We did have a bullish reversal signal last week. That is still in play. We did not take out that low from the previous week. You can see when things start to turn around and the chart starts to turn blue, that's the time we want to be buyers. And that is certainly not the case coming into this week's trading action. Now, the technology stocks are still holding up. We may get a sell signal this week. We saw Shopify come down over 6% on the week. It's still on a weekly buy signal. That hasn't changed. We have to give honorable mention to BlackBerry, which has been up sharply over the last couple of weeks, and it's up. What did it close out on Friday? Nearly $6. So congratulations to anybody following BlackBerry. Of course, as a $6 stock, it certainly doesn't have any weighting compared to Shopify or a stock like Celestica, which made a new high this week. So congratulations to anybody with BlackBerry or Celestica. Okay, folks, that is all for today's presentation. Just a couple of closing comments. We've been watching the market diverge over the last month, where the majority of the market has been moving down, while a handful of big cap tech stocks have been basically holding the market up. That started to change a bit this week. It could have gone either way. The Russell 2000 could have started moving up above 225 again and started to move up to catch up with those big cap tech stocks. But apparently, it looks like the whole market's going to come down right now. Now, what's happening in Los Angeles, of course, is horrible. It's hard to imagine anything like that happening. Luckily, not that many people have died. Given the scale of the carnage, not that many people have died, which is a good thing. But of course, having all those homes wiped out, and not only the homes, but the schools, the stores, all the municipal buildings, all that is gone. So it's just being wiped off the map. At some point, there's going to be opportunities for companies to come in and build houses. They're going to need building materials. They're going to need all kinds of things. I'm not sure when, at what point you want to step in, because a lot of these stocks could go down with the rest of the market if the market's going to continue lower from here. But these are some building materials companies, and you can see a lot of them are already ranked as 0 on the daily chart. So they're selling off with the rest of the market. And of course, there's going to be home building companies going to have to come in and build those homes. At some point, it's going to be an investment opportunity. It's probably not on Monday. And Trump's going to become president pretty soon, and he wants to put tariffs on everything from Canada. Is he going to put tariffs on lumber? because there's gonna, to rebuild Los Angeles, you're gonna need a lot of lumber, and Canada provides a lot of that lumber right now. So it'll be interesting to see what Trump does with his tariffs going forward. Okay, folks, that's all from me. Enjoy the rest of your weekend. Next time you'll hear my voices on Monday morning, and we'll walk through the most actively traded stocks from Friday's trading action.